What's going on, guys? Welcome to Trenches Trading. I'm your host, and we are going to look at some charts for this upcoming week. Today is Saturday, November 1st. It is 9:21 p.m. Eastern Standard Time. All right, so right here in front of me, I got a chart of the SPY, and before I go over the names on my watch list, I just want to go over the actual markets themselves. All right, so as you all know, the markets have been trending higher since April. SPY is up 41%. And on this monthly chart, SPY is up near 3 ATR. Okay, so for me, that means the markets are overextended here. And it's time for a little pullback. You can see over here, market gets up to 3 ATR, drops, and then it rides up 3 ATR, pulls back, up, back, until finally, we got a real drop. That's essentially what I'm anticipating now, right? Market comes up, rides this 3 ATR for a few months, and then mega pullback. Market comes up, hits 3 ATR, pulls back. Same thing, rides up, pulls back, comes up, pulls back. So there's always a reason, but the technical reason is that price is overextended. So this is a monthly chart of the SPY. And on the weekly chart, price is also extended up here at 3 ATR. Okay, so I am weary. I am on alert. What that means to me is trade smaller lots, more day trading, less swing trading. I want to not get caught in an overnight candle like this, essentially. All right. This one's not bad because the price opened up high and then it just, crapped itself throughout the day. But this right here, right? I don't want the market to close somewhere and then gap down overnight. Uh, you know, it's about a 1% drop overnight, which doesn't sound too bad. But if you're trading options, if the options are short dated, that could be horrible. So basically, I'm wary. Not to say that we can't trend any higher, but I'm on the lookout. And along with the market being overextended, the VIX over here is at 1744. So whenever the VIX is up over 17, I expect it to tap 20. It could pump through 20 and continue to push higher. It could hit 20 and, revert back down, but over 17, and I'm being watchful. So anyways, that's the SPY. Let's look at the Qs and technology, right? Same thing. Market's fully extended. On the monthly, it's at 3 ATR. On the weekly, it's crossed over 3 ATR this past week and then came back some. And on the daily, it's just essentially building this little area where it seems like it's in a range. Wouldn't surprise me if the market kind of trends sideways here for a while these moving averages catch up. Or perhaps if the market pulls back, closes this gap, maybe even closes this gap down here at 610-ish. So that's the Qs. Let's look at the Dow Jones. So it's not quite at 3 ATR on the monthly. It's not quite at 3 ATR on the weekly or on the daily. So the Dow Jones has a little bit more wiggle room than the SPY and the Qs do. And lastly, let's look at the Russell. So the Russell kind of like with the Dow, right? It's got some space between here and the top, some wiggle room. It's also squeezing, so this thing might start firing long here as price has been pumping up, right, since April. Same thing with the weekly and the daily. The daily actually here on the IWM is in a great spot, a great spot for a buy. Um, Friday, Thursday, and Wednesday, the price was in the buy zone, in my buy zone, right? So my buy zone is going to be here between the 21 and 34. I'm happy to buy underneath the 34 within within this pattern. But ideally, I'm happy to get in the markets in between this area. So this thing pulled back. Um, my guess is it's getting ready to either rip up higher or it's about to lose this little trend here that I can see. Right, it's got this little trend line here building. Price tapped it, made a higher low, made a higher low. The only thing that I don't like is that even though it made a higher high here, it made a lower high here. So just some warning signs, some things to be aware of. Price did close above this major volume shelf. So seems like the buyers are in control above this 244, 245 area. All right. So that's the Dow, that's the Qs, the SPY, and IWM. We saw the VIX. Before we jump into these charts, let's see what we got coming up for this week. All right, so November 1st, no news. Sunday, nothing. Monday, okay. So we got ISM manufacturing PMI. Let's look at this. This is the Institute for Supply Management. And it's a leading indicator of economic health. Businesses react quickly to market conditions, and the purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. All right. So this is a survey of 300 purchasing managers, and it basically asked them to give their outlook on employment, production, orders, prices, supplier deliveries, and inventories. Basically tells us how business is going. So that's on the agenda for Monday at 10 a.m. Okay? So my guess is if businesses are not doing well, this VIX is going to spike up even higher and we might start seeing the markets pull back. I wouldn't say the IWM, the Russell, because it's already pulled back. But the Dow has space to pull back, the Qs have space to pull back, and the SPY has space to pull back. When I say space, I mean that there's a gap between where price is currently and my moving averages here, 21 and 34 EMA. So price could easily fall down, right, and consolidate here in this area. Okay. Back to the news. So we've got go back. Tuesday. JOLTS job openings. Number of job openings during the reported month, excluding the farming industry. Alright, so we know that unemployment numbers are high, but now we're going to figure out if there's actual job openings that these people can pursue. All right, and then Wednesday, November 5th, we got the non-farm employment change and ISM services PMI. So it's going to be estimated change in the number of employed people during the previous month, excluding the farming industry and the government. All right, so we're going to find out the unemployment numbers. We're going to find out how many jobs are open, And then we're going to find out how many people have become employed in October. And then ISM services PMI, level of a diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. All right. So same information that they're looking at, right? They got 300 purchasing managers finding out employment, production, new orders, prices, supplier deliveries, and inventories. That's Wednesday. So a lot of heavy news this week. Here we go. Unemployment claims Thursday. This is tentative, so this is on the schedule for a maybe. And then down here we got a couple FOMC members speaking. This is probably the only one I would pay attention to since it's got an orange folder. Waller. They're going to vote on where the interest rates should go or where they should be. We got unemployment claims, pretty self-explanatory, right? The number of individuals who filed for unemployment insurance for the first time during the past week. So again in October. And there was one more, right? No, that was it. So that's Thursday, and then Friday. Friday we got 1, 2, 3, 4 red folders. So heavy news this week. Unemployment rate, percentage of the total workforce that is unemployed and actively seeking employment during the previous month. Average hourly earnings month over month. Change in the price businesses pay for labor, excluding the farming industry. So unless minimum wage is changed, I doubt this is going to change very much. Core PCE price index month over month. Change in the price of goods and services purchased by consumers, excluding food and energy, the two that matter probably the most, right? And then we got non-farm employment change. Change in the number of employed people during the previous month, excluding the farming industry. And then the unemployment rate, percentage of the total workforce that is unemployed and actively seeking employment. So, a busy week this week. We got heavy news on Friday, heavy news on Thursday, heavy news on Wednesday, heavy news on Tuesday, and heavy news on Monday. If you don't feel the need to trade this week, this is probably a good week not to trade. Or at least maybe not to swing calls. But it might be a very good week for puts, being that the markets are extended on the weekly and monthly charts. We might get a nice pullback down to the 21 EMA for the SPY, the Qs, and the Dow Jones. Alrighty, that's my little take. Let's look at some of these charts. So this is Agilent Technologies. They've got earnings coming up November 24th. This looks like a pretty symmetrical pullback, which is typically a great support level. Let's see. Yeah, beautiful. 141.95. The low was made at 142.21. This is a great setup. We got a symmetrical pullback, confluence with the 21 EMA. And if I go down to a 30-minute chart, the moving averages have switched over positively. We made a higher high and a higher low on the bounce from this level. So I like this setup. This is really technical. Essentially, you can get in. You would ideally want to get in as close to this area as possible. But let's just say you got in where price is currently. You're going to stop underneath the zone. So it's 141.95. And the 21's at 141.60. I'd honestly probably just stop out under 141. 141.40 is pretty cool for me. So I'd stop out under 141.40, and I would probably target a move up around here. So that's going to be the fib level, confluence, also with the 3 ATR, and you'd be risking basically $1 to make $1, unless you get in, closer to this zone, then your risk reward changes, right? But I wouldn't mind a short-term one-for-one trade setup. I like that. Let's see what kind of options the Agilent technologies have. Agilent. So they have monthly contracts. I got way too many contracts showing here. And I'm not too fond of these contracts. I think there's really wide spreads. If I was sold on this company and I really wanted to play that setup, I would likely buy a vertical spread. So this is not bad. It's a 5 wide. You're paying $250. Essentially, you're paying half the price. All right, if it's a 5 wide, that means the most you could profit would be $5, and then that would be minus the premium you paid. So $5 divided by 2 is $250. So essentially, not only are you risking a one-to-one in terms of price action, but you're risking a one-to-one in terms of the contract as well. You'd be paying $250, and the most you can lose is the $250, and the most you can make on the trade is the $250. So I like that setup. Let's look at the weekly, and they've got some room, and on the monthly they got plenty. They got plenty of space between where price is currently and the 3 ATR. Let me see just quickly what the monthly fib looks like. What's that? 96.80, 96.43. Okay, so there seems to be some resistance up here around 155, which is also a psychological number. And our strike that we sold was the 150, so that's fine. I like the setup. I like the technicals. All right, APH. Oh Lord. So APH has blasted through its 3 ATR, and it's up here at 5 ATR on the monthly. 3 ATR on the weekly. They did good for their earnings report, and on the daily. So this chart is pretty extended. If I wanted to trade it, I would look for like a day trade type of setup. Just zooming down here on these charts. All right, so the 1 hour chart has a nice little setup. Again, I would ideally want to get in this type of zone between 139 and like 137.70 would be ideal. I'd probably stop out under 137, and what's this high? 141.72. Yeah. So this thing just got rejected up here at this 140 level. I'd love again to pick it up here in this zone. I'd stop out under 137 and aim for taking profits above 142, essentially where this 3 ATR and this fib level come together. So ideally you're getting in like around there. Stop loss is going to be about there, and be taking profits about 142. So risking $1 to make $2.50. Better risk reward ratio than A. Let's see what these contracts look like. Horrible. Yeah, these spreads. I mean, this one's not terrible. It's a 30-cent spread. It's a $140 stock. 30-cent spread is not terrible. I could I could manage that. I could deal with that. So there's 140 calls November 21, 140 calls on APH if I felt compelled to get involved. They beat earnings, which is a good sign. You see they've been trending higher ever since. Um, but I would be wary, again, this thing is super extended on the weekly and even more so on the monthly. Um, yeah, that's APH. AVGO. So I've been taking profits on this name for a little while now, couple weeks. I think I've traded this thing like for the last 3 weeks consecutively. They're up here at 3 ATR on the monthly. On the weekly, they've prices pulled back some, so it's about $20 away from 3 ATR. They have earnings coming up December 11th. They beat their last earnings report. They just had a dividend in September, and prices is really starting to move. So price got up here near 3 ATR and then started pulling back, which makes sense. Right, the squeeze set up here finally fired long. And price hit TP1 on the fib retracement. All right, so price hit TP1, which was also a confluence area with 3 ATR. Squeeze is fired long. We have earnings coming up. And, the entry was down here around 339, 340. So, if anyone took this trade with me, we caught this 13% move in about a week. Um, beautiful, beautiful move. Let's see if AVGO has any setups on shorter time frames. It popped up on the scanner today, so it's a candidate. And here we are. Okay. So we've got this sort of cup and handle shape, right? All right. And typically out of this pattern, price tends to push higher. Yeah, we got a pullback into this buy zone on this 78-minute chart. All right. I'd buy anywhere in this area as long as the squeezes don't fire short. I'm happy to take a trade here. We've got this sort of channel that has built up. Okay. Let's see. Let's see which way this thing breaks. Right. If it breaks lower out of the channel, there's a high possibility that it bounces here. If it breaks up out of this channel, it's a high possibility this thing goes up to 400. Right. The high was about 385, 386. Let's see what contracts. I like this November 21 series. These 370s look good to me. Right, there's a 55-cent spread, but this is almost a $400 stock, so it's a lot different than paying, a 30-cent spread in a $100 stock. This to me is a better deal. If you don't have the capital for something like this, again, I would suggest like checking out vertical spread. You could buy a 250 wide, 2.5 wide spread for $1.18. Really good, really cheap. Or you can go for the 5 wide for $2.30. So really good premium. The top of this is 375 and the top of this range is 385, 380. So just to bounce from this area back to these highs, and you'd absolutely be profitable in this position. All right, that's AVGO. And look, my TP was hit. All right, let's remove this stuff. Let's check out the monthly. So plenty of space between the 3 ATR and what price is currently. On the weekly, it's a little tight. They also report earnings on 26th of this month. And on the daily, look, prices come right back down to the buy zone. So on Friday, price wicked right to the 21 EMA. It would have been a great entry. All right, again, this is it's a good area to be involved. 155.60 to 152.18. And excuse me. So the top of this, 168.98. You know, I can expect price to come back up and retest this 169 area. We got squeezes. Momentum is light blue, so it's positive. Right? Momentum goes up, comes down, goes up, comes down. And right now it's going up. There is some divergence, right? Momentum's going up and the price is coming down. So I would just keep an eye on that and see how price reacts in this area. This is the point of control at 151, and we have this huge volume shelf also here at 152.81. So if price falls into this zone, I think it'd be a great place to pick up some contracts and see if this thing can't turn around. Let me slap a fib on here just to see. So, you know, there's some resistance here, 163, 164. And then, of course, 168. Let's check out these contracts in 5. They have earnings. Oh, they only have monthlies. So, these spreads are, I'm not a huge fan. I like these 160 calls. This is a 70-cent spread. And I would think AVGO, almost a $400 stock, would have a 70-cent spread, but they had like a 50-cent spread. So for this, you know, I'm not super excited. Also, the fact that price hit this area and then basically sold off immediately, I'm not a huge fan. GD. On the monthly, this thing has been ripping. On the weekly, it's ripping. And on the daily, it's pulled back some. So it's interesting. You know, this wick right here, this would have been a good time to get involved. Let's see, they beat their earnings. So price from this swing in early October, price hit the second target, plus 3 ATR, and then pulled back to what used to be resistance, right? 341 resistance. Boom, boom, boom. And then it became support. So super technical chart. We've got a squeeze here on the daily. If you can catch the price underneath 340, you know, then I think that's a good risk reward ratio. I'd stop out underneath this 336. And besides taking profits like at 354 and 360, you could aim for this 366 area as well. All right, GE. Look at this. GE's been on a tear on the monthly, weekly, and now here on the daily. So on the daily, prices come up a little bit, come back down. It still has a a little ways to fall. Um, before it gets back to the 21 at 303, about $6 move. So I would just be patient for GE. Let's see what GE's contracts look like. All right, so GE again, right, $300 stock. Um, so this kind of spread, what is this, 55, 60, 70-cent spread on the $300 stock makes more sense to me than the 70-cent spread on a $100 stock. All right, so I'm not a huge fan, but if I were going to get involved, I could accept that. So Google smashed through my targets. I was risking one to make $2.96, and this thing just ripped, hit 5 ATR. So beautiful trade by Google. They beat their earnings. Google's doing a lot of good things. They got VR, AR. They got driverless vehicles. You know, they partnered up with a lot of different cryptocurrencies. I think the most notable one Google is involved in is, what's that thing called? Flare, FLR. So actually, I can pull up a chart. Flare USD. This is the one that Google is involved in heavily. So price right now is down here near the buy zone, right? At the lows of 1 cent. It has a high of about 5, 6 cents. So interesting stuff. Just something I thought about. Again, Google just beat earnings, right? So look at this. You just got to know where to look, right? 15-minute setup. 1, 2, 3. This is what they call a triple bottom. They had news come out. It's moving to capital heavy operations fueled by major investments in AI, leading to higher borrowing to support these ambitious initiatives. So look at that. They're also involved in AI. Just doing great things overall. If they decide to close this gap, it's going to be down here at 275 and 34 cents. If not, then I would expect the price to turn around and shoot up towards 300. On that earnings jump, the price hit 291 and 59 cents. And if I put a fib on, all right, the first fib level is up here at 295. TP2 is 300. So I could definitely see Google ending the year at $300. Nice little 15-minute pattern. Definitely something worth keeping an eye on. Okay, we got LVS. LVS has this monthly setup. Price is far from 3 ATR. Same thing on the weekly. On the daily, it's up here hugging 3 ATR, right? So they beat their earnings. Price shot up over 10%, like 20%, I think. Let's see if my math is decent. Yeah, 17% jump in 9 days. And it's maintaining this 58 level. You can see price was rejected here before, previously, right? This was resistance, and now it's become support. Same thing, shorter time frame setup. Look at this. They have this is a really nice 30-minute setup. I like this pattern a lot. LVS. Let's see what these options look like. So 30-minute chart. Yeah, this is beautiful. You can get 20 days of time, pay about $1.70 here for these 60 calls. And you know, this thing it's got plenty of space. It's got a weekly squeeze where the momentum is just shifted, right? This was is the one. So this is the third month. So back in July, momentum was down, and now the momentum is up. I am willing to bet this thing wants to shoot up towards $70. If I put a monthly fib on it, right, this level 65, 3 ATRs at 71, TP1's at 75. So LVS is definitely one to watch. This is a beautiful 30-minute chart, in my opinion. All right, MS. I got this set up here. Let me remove that. So MS is up here at 3 ATR on the monthly. Not too far from it on the weekly. And it's got some space here on the daily, right? About $6, $7. They beat earnings, 33% beat. That's awesome. And price has been rejected from this 166 level a few times. Definitely, I'm sure wants to get up to 170. TP1 is at 169 and 3 ATR is at 171. Morgan Stanley. The financial sector has been beat up for the past couple months. Let's look at it real quick. XLF. Right, this thing has been coming down, down, down. So I could imagine that money is probably going to flow into this thing soon. Like Morgan Stanley, like this daily squeeze. Again, they beat earnings. If price stays supported above 160, then I would use 160 as a stop loss, which would essentially make this like a good buy zone. Morgan Stanley, $160 stock, 25-cent spread for these 162 50s. Not bad. And this one's a 30-cent spread for the 165 calls. So not bad at all, Morgan Stanley. MU. On the monthly, this thing is blasted through its 3 ATR. I mean, this chart looks phenomenal. The weekly, same thing. And the daily, it's up here at 3 ATR. This thing has just been on fire. I probably look for like a smaller time frame chart. So price bounced off this level here, this 219, 218 area. I'd use this as a stop loss for sure. And see if price can't get back up to this area where it keeps getting rejected, this 231 area. Essentially risking $1 to make $1.55. That'd be my play on MU. These premiums are expensive, so if you can't afford them, again, you can always go with a vertical spread. Right, this 5 wide for 210, basically risking 210 to make 290. It's not a bad setup if your budget is tight. NVIDIA, oof. This is a beautiful, beautiful 30-minute squeeze. Let's see, the monthly's up at 3 ATR, the weekly's up at 3 ATR, the daily's up at 3 ATR. They got earnings November 19th, but they have this beautiful pattern. I would absolutely get involved on this chart. Use the bottom of this pattern as a stop loss. So basically 201 would be my stop. And they got earnings on the 19th, so definitely go with the 21 series. These 205 calls are fine. Because it's an earnings expiration date, you can go a little bit further out the money. The contracts tend to hold the premium better, so you could even go out and get these 220s for 360, 355. That's not a bad trade at all. If price wants to keep on pushing up, I would expect it to come up towards this 5 ATR, which is 222. And if we put a fib, then we can see what the actual levels are. I need to expand this a little bit. So we got a level up here at 226, a 5 ATR at 222, and 214. The average of these three is about like 221. So definitely would aim for this 5 ATR out of this 30-minute squeeze. This is a beautiful pattern. This is the most picture perfect, I think, pattern that we've seen all night. This is the bull flag. All right, looks like a flag. Write in the comments. Tell me if this looks like a flag. All right, RTX. Look at this. Another picture perfect 30-minute squeeze. So RTX and NVIDIA, those 30-minute squeezes are probably my favorite. This thing was supported here, a little double bottom off this 176 area. Let's look at the monthly real quick. So this thing is blasted up 3 ATR. The weekly's at 3 ATR. They just beat earnings on October 21st. And this nice 30-minute squeeze is here. Ideally, I'd get in on a pullback under 178, between 178 and 176. And RTX. These contracts are cheap. I mean, relatively speaking, right? Like these 180 calls, you get 20 days, and they're about $3. 30-cent spread. Not bad at all. You know, stop underneath 176, and you know, essentially seeing if this thing can push up higher towards 190. I'll put a fib on this. And you can see this next level is going to be 186. And the level above 186 is 195. So you also got 5 ATR 189. So RTX and NVIDIA. Love those patterns. And last but not least, this is SF. Stifle Financial Corporation. So another finance chart. They just had earnings on the 22nd, so about a week and a half ago. They beat earnings, which is good. And we know the financial sector has been beat up. They got a 130-minute squeeze. So it's not the prettiest looking chart. But moving averages just flopped positively. There's a chance the price can pull back into the buy zone. All right, price is at 118. Ideally, you'd want to pick this up between 117 and like 114. Let's look at SF contracts. So they only have monthlies. Oh, this is horrible. No. So I would not trade this. These spreads are, I'm not going to say it, but these spreads are bad. Pretty ugly. Don't waste your time. I'm going to take that off the watch list. All right, guys, that's my setup for the week. I hope this helps. If you got any questions, leave them in the comment section. Like, subscribe, hit the alert bell, all that good stuff. Happy trading.